Assalamualaikum. For today's topic, we are going to look at self-assessment for companies. Under this self-assessment of the companies, basically what we are going to look at will be according to this outline, and this topic should be read together with the chapter 32 in your textbook. Okay, so what will be covered is actually basic computation of the tax estimate and monthly tax installment, and also later on we will actually look at the computation of final payment of the actual tax payable, and if there is any presence of margin of error. So what will happen is that for the companies, this is actually for Sendirian Berhad and also Berhad, not for enterprise or partnership. Okay, this is solely for company when you establish as under Sendirian Berhad and also Berhad. That means you are binded by Companies Act. Okay, for the category of corporate taxpayer, the self-assessment has begun since YA 2001, year of assessment 2001. So meaning in 2001, the basis period for YA 2001 would actually be any financial year ended 2001. So if you still can recall, the basis period or basis year for company is actually following financial year of the business. Okay, because financial year of the business can be ended in any month during the calendar. So what will happen is that the company is actually required to furnish estimate, okay, of their income tax payable for a year of assessment. So in basically before the beginning of financial year end, okay, for a particular year of assessment, company have to estimate how much will be their tax liability or their tax payable for the following year of assessment or for the following basis period. Okay, so that is actually the objective, what you need to learn. Okay, computation, how to estimate the tax, and how much later on will be the tax liability for the company. Okay, under the tax estimate, so this is the first step. The first step is actually to estimate the tax. So what will happen is that the tax estimate must be done before 30 days before the beginning of the basis period. And once you have done the estimation, it must be filled up form CP 204, and then it must not be less than 85% of the estimate or revised estimate of the immediate preceding year of assessment. Okay, so I give you example here how actually to compute tax estimate. Okay, here the example is that basis period for year end 31st May 2001. Okay, so this is actually for the year of assessment 2021. So for the year of assessment 2021, the basis period will be financial year end 31st May 2021. So basically that for this particular financial year end, it will start from 1st June 2020 until 31st May 2021. So what will happen is that okay, what will happen is that for YA 2000, the preceding, okay, the immediate preceding year of assessment, YA 2020, the tax estimate was 120,000, and then after that, the company revised their tax estimate to 160,000. Okay, so initially the estimate before beginning of the financial year end for YA 2020, they estimate 120,000, and after that during the year end, during the financial year, they revised to 160,000. Therefore, tax estimate for YA 2020 must not be less than 136,000, which is 85% of the previous tax estimate for the prior year of assessment. Okay, so once you have done, okay, you compute. So that means that it must not less than 136,000. So minimum must be 136,000, but it can be more than 136,000. Okay. So once you have a compute, how much is the tax estimate, and then you fill up form CP 204, and then 30 days before the beginning of the next basis period, then you must submit your CP 204. So later should be by right 30th April 2020, not 2021. Alright, take note of the typo error there. Okay, so that is the first step. Okay, first step, compute tax estimate, which is 85%, should not be less than 85% of the preceding tax estimate or revised estimate of preceding year, and submit 30 days before. So the amount and the date is actually important. Okay, the next one, once you already estimate how much is your tax liability that you for that year of assessment, then you would start to pay monthly installment. Okay, you would have to pay monthly installment, because imagine if you wait, you did not pay monthly installment, then when you come to the due date, you have to pay 136,000. So where the money would come from? Because company would have to manage their cash flow. So in order to ensure that they have adequate cash flow to settle their tax liability, that's why they are given services in terms of they are allowed to do monthly installment. So it is actually similar to individual when you pay your monthly deduction or scheduler tax deduction. Remember, I did mention in the first class. Alright, so for the company, they are allowed to do monthly installment. So how do we know how much is the monthly installment? So the step will be the tax estimate divided by 12 months, because one financial year you would have 12 months. Okay, so whatever amount of your tax estimate divided by 12 months, therefore you would know how much is your monthly installment, and this monthly installment must be settled latest by 15 of every month. Okay, 15 of every month. In the old textbook is mentioned 10, now has been changed to 15 of every month. Alright, so and then this monthly installment would commence from the second month of the basis period. Okay, let's look at the example. So let's say your year end is 31st May 2021, which is year of assessment 2021. So your basis period will start from 1st June 2020 until 31st May 2021. Okay, so your amount of your tax estimate just now is RM 136,000. So how much will be your monthly tax installment? So 136,000 divided by 12. Therefore, you will get roughly 11,330 ringgit per month. Okay, so that will be your monthly installment per month, and your first installment would commence on 15 July 2020. Okay, why 15 July 2020? Because you only commence in the second month. Okay, so first month of the basis period is June, so the second month is July. So latest 11,330 ringgit must be settled latest by 15 July 2020. Then it will go every month, every 15, latest by every 15 of every month. Okay, so once you have compute the monthly installment, so you just pay on monthly basis. So you can opt not to change your tax estimate, but you are also given option to change your monthly installment if let's say you noted that your business during the year there is an increase of performance. Okay, that means your performance is getting higher and higher, therefore you don't want to have such a big amount of tax liability to be paid for that particular year of assessment. And another reason why is because we want to avoid penalty. Okay, penalty for doing some of error in estimation or underestimation. Okay, so that's why we have to estimate plus minus. Okay, there are some margin of error which is allowed by income tax to the company. Okay, so later you will see about margin of error. So now let's look at what do we need to do when we want to revise our tax estimate. Okay, companies are expected to pay appropriate amount of tax as any underestimate may be penalized. Okay, so the keywords here is we don't want to underestimate. Overestimate is okay because whatever overpayment it can be carried forward. But underestimate is the one that not allowed by income tax, okay, to the company. So the revise of estimate can be done in the 6 month or in the 9 month or in both of the months. So you can do once either 6 month or in the 9 month of the basis period or both months. So you have option to revise 2 times. Okay. So what will happen if you want to revise? Okay. So let's look at the example. Okay. Example here shows that company would like to revise its tax estimate in November 6. Okay. In November 6 month in that basis period. Okay, so we are still using the same basis period just now. So just now it is 1st June, 1st June 2020 until 31st May 2021. So if based on this basis period, the month of the 6th month is actually November. Okay, June, July, August, September, October, November. So November is your 6th month. So in the 6th month in November, you decide to revise because you notice that your business performance is very good, increase. Okay, so you want to revise initially from RM 136,000 to RM 170,000. Okay, so you revise to higher 170,000. So what do we do? Meaning that now the monthly installment will be changed. Okay. So how do we want to compute for the new monthly installment, new amount of monthly installment? So first we identify, okay, because we do this in the 6 month. So for the first 5 months, you already pay your monthly installment. Okay, you already pay your monthly installment. So meaning that your monthly installment for the first 5 months is RM 56,650,000. Okay, so your 5 months is 5 months multiplied by just now monthly installment 11,330, right? So multiply by 5 months. So total monthly installment that you have paid so far is 56,650. Okay, so based on the new revise, you have to pay 170,000, right? So but you have paid 56,650. So we take the outstanding after revise. So what we do, we had take 170 minus 56,650. Therefore, you will get 113,350. Okay, so based on this, okay, based on this new outstanding balance, then we divide by number of months left. Okay, number of months left. So we have paid 5 months. We still have left out 7 months because total, remember, total monthly installment is 12 months. Okay, so we have paid 5 months. So we still have balance of 7 months. So the outstanding just now divided by 7 months. So we get RM 190 per month. Okay, so this will be your new monthly installment starting December. Okay, so latest by 15 December, you pay until June 2021 every month. Okay, so this is what happened. When you revise, then you need to compute your new monthly installment. Okay, so what will happen? Alright, so now you already pay your monthly installment based on the new revised amount, then come to the end of the financial year end. Okay, come to the year end of financial year end. So here what will happen is that, okay, now the year end is 31st May 2021. Okay, now the 1st May is 31st May 2021. So we must submit our Form C. For company, for corporate, we fill up Form C. Okay, So Form C must be submitted not later than 31st December 2021. Why? Because for company, you are given 7 months after the closing of the account to submit your account. So from May, so 7 months, June, July, August, September, October, November, December. So by December, you must submit your Form C, completed your tax computation and so on. And once you have filled up your Form C, you already know how much is your actual tax payable. Okay, so based on your tax computation in your Form C, you notice that your actual tax payable is 250,000. Remember, this is self-assessment, so you compute your own tax payable, similar to individual. Alright, so what you compute your actual tax payable, you find out that it is 250,000. So any penalty or not, any margin of error or not. Okay, so let's look at the computation to see what will happen if you exceed the margin of error. Okay, so here the actual tax payable as what you have computed is 250,000, and just now your revised tax estimate is 170,000. Okay, so the difference will be 80,000. Alright, and then your margin of error, how much will be your margin of error? So margin of error is actually 30% from actual tax payable. Okay, 30% from actual tax payable. So from actual tax payable, 30% is 75,000. So the difference just now is 80,000. So you have excess over your margin of error of 5,000. So basically you have exceed your margin of error by 5,000. So what will happen since you exceed your margin of error? So you have penalty of 10% on your margin of error. Okay, which is 10% of 5,000 will be 500. Okay, so in this case, the amount is small. What will happen if your margin of error is your excess amount of your over margin of error is big? So it quite actually big amount for the company. So penalty 500. So now how much actually the company need to pay to the income tax? Okay, the actual amount that they need to pay to the income tax will be actual tax payable, which is 250,000 plus 500. So total that they have to pay is actually 250,500. But in actual fact, after you deduct your total monthly installment just now, 170,000. So you only need to pay the balance of tax payable will be 80,500. Okay, so it's still quite a lot of amount of money, okay, for the company to pay. Alright, so this is how you compute your margin of error and how do you compute your actual tax amount that you need to pay in December. Okay, because you are given 30 days from that date, okay, to pay. Otherwise, still another penalty. Alright, so what are the common penalties that imposed for the corporate taxpayer will be? If your monthly installment you delay, then there will be 10%. So monthly installment need to be paid by 15th of every month. So let's say you pay on the 16th, then you will be penalized, okay, 10% from the amount. Alright, so on top of the actual amount that you have to pay, then plus another 10% penalty. What will happen if you late payment your final tax payment just now? Okay, the 80,500 just now, still again another penalty. Alright, so that's why company would have to observe all the requirement of the payment that they need to pay to the income tax, because there are always penalties imposed by the income tax. Okay, because they want to ensure that company is actually observed strictly in terms of payment. Okay, because LHDN don't want to have any delay of payment on the income tax to the income tax office. Alright, so that is actually with regard to the computation of the tax estimate and final tax liability for the corporate taxpayer that you need to know under self of assessment for the companies.